From Mumbai News Center, I'm Sonal Bhutra and you're watching Power Breakfast. It's a grim picture as far as the global markets are concerned, red across the screen. So let's talk about that first. And the Asian markets is the negative sentiment that continues to weigh on the markets with an all-round decline in Asian markets. It is led by the US. Kospi today is leading the gains with cuts of almost 3%. Hang Seng and Taiwanese index, as you can see, are down anywhere between 0.2% to 2%. And a lot of macro data in Asian markets, which is expected later this week. China to release data on factory activity, and our own central bank, the Reserve Bank of India, will meet later this week to decide on a rate hike. As a result of all of this, the SGX Nifty is indicating that the start for our own markets could be in the red again. A sharp downtick, a 156-point decline is what the SGX Nifty is indicating. Let's talk about the US markets now. Wall Street ended Friday's trading session lower, with the Dow Jones sliding over 450 points, the S&P 500 and the Nasdaq Composite closing over 1.5% lower. CNBC's Mike Santoli gets us a wrap of all the action on Wall Street.
Wall Street sell-off continued today on growing fears the Federal Reserve will go too far with its anti-inflationary interest rate hikes, pushing the U.S. economy into a recession. The Dow closing down around 1.6%, bringing it back below 30,000 to a new low for the year, although some late buying did lift the indexes above their lows of the day. The S&P 500 ended down 1.75%, and the Nasdaq finished down around 1.8%. Another factor in today's drop, turmoil in the currency markets. The British pound fell sharply against the U.S. dollar after the U.K. government unveiled big tax cuts that could fuel more inflation in that country. That's the action from the U.S. market. Back to you in Mumbai.
Okay, recession fears hurting economies across the globe, but let's get in some important views coming in from the global market. Jeremy Siegel says that the Fed does not need to aggressively tighten interest rates all the way until 2023 to curb the rise in inflation. Listen in.
When we had all commodities going up at rapid rates, Fed Chairman Powell and the Fed said, we don't see any inflation. We see no need to raise interest rates in 2022. Now, when all those very same commodities and asset prices are going down, he sees, stubborn inflation that requires the Fed to stay tight all the way through 2023. Makes absolutely no sense to me whatsoever. Way too tight. We do not have to get anywhere near that level to stop inflation, because all the inflation is basically stopped.
I think this actually brings us to a much better place than we had been over the course of the summer. I recognize the sell-off today. I recognize the sell-off over the past couple of days. But it feels to me like expectations are finally becoming a bit more aligned with the way that reality may play out. And so there's definitely going to be more pain ahead. And, now that we have more clarity on the Fed and, we'll get some more clarity on inflation, everybody's talking about what that may or may not mean for corporate profits next year. But, looking at the Fed's forecasts that came out on Wednesday afternoon, what was so interesting to me is that they see a very tepid pace of growth with an unemployment rate that rises in 2023. That is going to be a challenging backdrop, particularly for risk assets. And so from an investment standpoint, we're really focused on following cash flows.
Okay, that is some expert opinion coming in, but now we'll get you some important commentary from the Federal Reserve itself. Atlanta Fed President Raphael Bostic reiterated the central bank's commitment to rein in inflation. In an interview to CBS News, he said the Federal Reserve is going to do all it can to avoid deep pain. The Atlanta Fed president believes job losses could be smaller than what those seen in other situations. Bostic acknowledged the Fed's actions could result in job losses, but is optimistic about the economy's ability to absorb rate hikes. He also said that he sees positive momentum in the economy despite 2 consecutive quarters of negative GDP growth. All right, this takes us to the final update on our global market check. European markets also ended sharply lower on Friday, with the French CAC sliding almost 2.5%, the German DAX and the British FTSE closing about 2% lower. The British pound fell to record lows against the dollar on Friday after the UK government announced a radical economic plan to boost growth as the economy braces for recession. Announcing an extensive tax cut and investment incentive program, the newly appointed finance minister said UK was targeting a medium-term 2.5% trend rate in economic growth. The yield on the 2-year German government bond also hit a 14-year high following a lower Eurozone Purchasing Managers Index reading. Okay, all the global market action. Let's talk about how this will impact our own markets. We have a research team joining us bright and early this Monday morning to tell us what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek is joining us first up to tell us the market setup today. Hey Vivek, good morning.
Well, good morning, Sonal. Now, Sonal, we are actually going into this Monday morning with a very weak global handover. It's a sea of red across most of the global market indices. Like you mentioned, the entire global markets, especially the Europe as well as US markets, have given a very weak handover. And this, in fact, is a weak handover for the fourth consecutive week running. Now, when you're talking about, how exactly our brokerage is looking, especially at the target as far as US markets are concerned, Goldman Sachs has been forced to cut its, year-end S&P 500 target. And they've cited the following worries, which they believe will impact, markets, equity markets across most of the emerging markets as well as the developed markets. So rising rates, the hard landing of the Fed that has led to increasing interest rates, as well as recession fears, is something that has made them go quite bearish as far as equities are concerned. Now, when you're talking about currencies, the dollar strength continues. The euro per pound has actually gone to a 37-year low, and this is something that is, spooking the street, especially as far as the currency markets are concerned. Oil prices, still a bright spot as far as the Indian markets are concerned, have eased a little bit, and that remains the only bright spot in today's trading session. When you're talking about, today's morning trade, most of the Asian markets have opened quite sharply down. Most of the Asian markets are down anywhere between 1.8 to 2.2%. And in fact, the SGX Nifty is actually indicating a very sharp gap down as far as the Indian market is concerned, cut off almost 200 points versus Friday's Nifty futures close. So expect quite a sharp gap down opening as far as Indian markets are concerned.
Sharp cuts, yes, that's what expected for our own markets. Vivek, thanks a lot for that. And Vaishta is joining us now to list out the stocks that will be in focus today. Vaishta.
Hi Sonal, well good morning. First is Anupam Rasayan, and this is with respect to the 12th September fire accident which took place in their plant in Sachin GIDC. The Gujarat Pollution Control Board have issued directions for the closure of the plant, and they have directed a payment of 1 crore as interim environmental compensation. Moving on to Infibeam Avenues, wherein the company consolidates its international business across 4 countries with its flagship brand CC Avenues. Moving on to Britannia, wherein the company elevates Mr. Varun Berry to Executive Vice Chairman and MD and appoints Rajneet Kohli as the ED and CEO. Moving on to Lakshmi Organic, wherein the plant, which is located in Mahad in Maharashtra, resumes its operations post the maintenance shutdown. For Ashoka Buildcon, the company's wholly owned subsidiary Viva Infrastructure Limited has acquired a 49% stake in Ashoka Highways Bhandara Limited from IDFC, and the last stock is Natco, wherein the company launches CTPR product Natgen in the Indian market.
Okay, all right. It will be a lot of market-specific news, but of course, these stocks will be in focus as well. And finally, let's get you up to speed with what's happening in the F&O space. Hey, Nigel, good morning.
Well, morning, Sonal. The bulls have lost their footing in the last few days, and today as well, as you were indicating, the SGX Nifty is indicating another big gap down. The problem has been the flows. The FI's last few trading sessions, well, that relationship that they had with the Indian markets has gone into some turbulence. So let's see whether or not that continues. But currently, they're going at a net sell number of 2,000 crores odd, which isn't great. And the DIs, they're chimping in only with around 3 to around 400 crores odd. And the problem is now for the month of September, you have the FIs that have turned net sellers after the big buy flows that we saw in the month of August, and the DIs as well. So institutions have been net sellers. What do the FIs do in the F&O market? They covered some longs, they added short positions, close to around 29,000 short contracts, and now they're net short on the markets yet again. Close to around 80% of their positions are on the short side. The bigger problem, though, is there is aggressive writing that they have been undertaking. And even in Friday's trade, they wrote close to around 2 calls for every 1 put. And it seems a couple of those strikes, 17,500, 17,400 call. Between them, there was 75 lakh shares of open interest built up, and there was aggressive writing that we saw at those levels. On the option side, well, they're buying both calls as well as puts. Now, keep in mind, the Nifty is now in sell on rise mode till we take out that 20 DMA decisively. That's the way I'll read it. And that comes in at around 17,700 odd mark. But in the near term, could we be bracing for a bit of a bounce? Remember, in the last 6 trading sessions odd, we have corrected 770 points. SGX Nifty is indicating another 150, 170 point gap down. So that will be nearly around 950 points correction. So maybe in the near term, we could be bracing for a bit of a bounce. The PCI, remember, that was at 1.2, 1.3. That's come down to around 0.75 odd. And we have seen at around 0.7, we see some bit of relief out there. So risk reward could favor the bulls at around the 17,100, 17,150 odd mark. So keep in mind that range. If you get stopped out, well, you'll get stopped out at around the 200 DMA, which should come up for you on the screen. Important technical levels up there. So SGX Nifty, if you get that gap down, maybe a 200-point cut, track the first star lows, risk reward could favor you, and a couple of stocks moving in and out of the F&O band. So keep an eye out on them as well. Back to you.
Okay, so looks like it could be and it will be a negative start for the bulls for sure. Nigel, Vaishta and Vivek, thank you so much for joining us and prepping us up for this crucial trading day ahead. Let's step into a break now. Hi, welcome back. You're still tuned into Power Breakfast on CNBC-TV18. Let's talk about a new kid which will be listed on the block today. Precision bearing cage manufacturer Harsha Engineers will list on the exchanges today. Vaishta is here to tell us more on that. Vaishta.
Hi Sonal, well thanks for that. You're right, Harsha Engineers International will be making its market debut today, and the company has enjoyed a very healthy trading premium in the grey market ahead of the company's listing, and this is primarily because it is expected to be to capture the growth recovery in the auto ancillary space. So the IPO was subscribed 75 times and is one of the highest subscribed IPOs in the QIB category in the history of Indian equities capital market. The issue size is 755 crores, of which the fresh issue is 455 crores and the remaining 300 comes from the offer for sale. The company primarily operates in two segments: engineering, which accounts for the chunk of the revenue, which is 95%, while the remaining comes from the solar EPC business. The company has approximately 50 to 60% share in the Indian bearing cages market, and the money that will be raised from the IPO will be utilized for repayment of borrowings, funding capex, repair of plant and machinery, etc. Now, at the upper price band, the stock will be available at a price earning multiple of 33 times its FY22 earnings. Back to you.
Okay, looks like it could be a bumper listing, but we'll see which way things go considering the market moves today. Vaishta, thank you so much for all those details that you got for us on this new IPO that is expected today. But before we speak about more news and more updates, we'll slip into a short break now, and we'll get to all of them after this very short break. Stay tuned. Hi, welcome back. You're still tuned into Power Breakfast on CNBC-TV18. The GST Intelligence Unit has issued the biggest show-cause notice in the history of indirect taxation. The show-cause notice issued to Bengaluru-based Gamescraft Technologies demands 21,000 crore rupees over unpaid GST dues, interest and penalty. The company was promoting online betting via card and casual fantasy games like Rummy Culture and Rummy Time, and the GST unit has slapped a tax of 28% on a total betting amount of 77,000 crore rupees. The company has also been accused of promoting online betting and not issuing invoices to customers, has been caught submitting fake and backdated invoices. Okay, let's get to the latest from the commodity complex now. Crude recouped some losses in early trade after recession fears sent it crashing to an 8-month low last week. The US dollar's continued strength and concerns that rising interest rates will push major economies into recession have persistently put pressure on demand for oil. This was the 4th straight week of declines for oil futures, the first time since December. So let us get you some important opinion coming in from BofA Securities' Francisco Blanche. Listen in.
We are more on the constructive side when it comes to energy because we see three factors that could push prices higher. First, we think that at some point over the next 2, 3, 4 months, China is going to start reopening its economy, as we've seen already in Hong Kong, and that's going to lead to a big surge in domestic demand for mobility, but also international air travel demand within Asia. And globally, that's going to drive that consumption up. So we expect Asia to essentially deliver almost 90% of incremental demand growth in 2023. The downside risks I was going to add are obviously recession on the demand side, and then the second one I think is an Iran deal.
Okay, that is some opinion coming in on the commodity markets. But moving on to some important global developments, Italians are on course to elect the country's first female prime minister and the first government led by the far right since World War II. Exit polls suggest Giorgia Meloni's brothers of Italy and allies are all set to clinch about 43%, enough for a majority in the parliament. We get you the special report from Rome.
We're here in Rome at the Fratelli d'Italia party position, and the exit polls have just come out confirming a decisive lead for the center-right coalition versus the center-left. Now, the center-right coalition is composed of three major parties, including Forza Italia, Lega, and Fratelli d'Italia. The latter is set to achieve the biggest number of votes nationwide, an astonishing progression for a party that was only founded in 2012, achieved about 4% of the national vote in 2018, and is now set to become the biggest party represented in parliament. It also means that the leader of Fratelli d'Italia, Giorgia Meloni, is set to become Italy's next prime minister, but also Italy's first female prime minister and the youngest prime minister since the inception of the republic in 1946. Now, the coalition of the right have campaigned on an agenda of lower taxes, of putting Italy first, and also on a harsh immigration stance. And in terms of their approach to Europe, well, Giorgia Meloni has in the past few months moderated her Euroscepticism, but there is still a lingering impression that going forward, this future government will be a lot more critical of European policies than the predecessor Draghi government. But in terms of what's major focus on the agenda going forward, well, it is going to be the economy. The Italian economy is on the verge of entering into recession. It is going through an energy crisis, much like other countries are in the Eurozone, as well as Italy sitting on a huge debt pile north of 2.7 trillion euros that does not leave the new government a lot of fiscal headroom to enact policies to support households and businesses. Add to that the fact that, well, this is a coalition of three distinct parties with three distinct leaders. They've managed to stay united into the campaign and into today, but lots of questions going forward as to whether or not those parties can actually stay united in the future. Whatever happens, though, today marks the start of a new chapter for Italy, domestically and with its relations to the rest of the world.
All right, that's all about global politics. But if we talk about the global markets continue to reel under pressure, if we look at the Asian markets as we speak, Kospi is the one which is leading losses of around 3%. But the Hang Seng, that has recovered sharply from the lows. That one is up around 0.4%. When we started the show, it was down around 0.2%. So that one is leading the way as far as recovery is concerned. Taiwanese index continues to decline. That one is down 2%. The SX 52 has recovered a tad bit from the lows, but we'll have to see whether this recovery stays, or we will see what the global markets have done overnight as well. With that, we'll take your leave on this edition of Power Breakfast. Stay tuned. All the market action on Bazaar Morning Call.